Breaking news concerning the U.S. economy.
And it's gone.
What?
It's gone. It's all gone.
Not socialism.
All right, let's not panic.
And it's gone.
I'll make the money back by selling one of my livers. I can get by with one.
Government should be a partner.
I don't need anybody's money. It's nice. I'm really rich.
And it's gone. Gone.
Hey everyone, welcome to episode 5 of the Global Crypto Podcast with Luno. I'm James, and we're on a bit of a software engineering theme at the moment. Last week it was Fluffy Pony, Ricardo Spagni, who was lead maintainer of the Monero project. Now we have software engineer and computer scientist Joe Lubin. Joe was instrumental in the forming and the foundation of Ethereum. Of course, it was the brainchild of Vitalik Buterin, but Joe assisted and contributed in the launch of Ethereum, and of course he set up ConsenSys, which was a company, an organization which aimed to help other companies utilize and leverage the Ethereum platform, and it continues to successfully implement numerous distributed applications on the Ethereum platform from their base in New York City. This episode is of course proudly sponsored by Luno, so before we get into this intriguing chat, let's hear from Luno.
For fast local bank deposits and withdrawals, advanced charting tools, and API access for automated trading, sign up with Luno, Africa's most trusted, secure, and reliable crypto exchange. Go to www.luno.com or download the Luno app. Ranked in the global top 10 exchanges by Crypto Compare. T's and C's apply. Cryptocurrencies are volatile and unpredictable. Never risk more than you're willing to lose.
One of the most influential people in Web 3.0, a key pillar in the foundation of Ethereum's launch to the world and subsequent establishment in modern society, founder of ConsenSys and the Ethereum Foundation, an AI and robotics engineer. Ladies and gents, I give you Joe Lubin. Joe, welcome to the Global Crypto Podcast.
Thanks, James. How's it going?
Yeah, it's going well here. We are surviving lockdown as best we can. Where have you decided to do your lockdown? Are you doing it in Canada or on the East Coast in New York?
My quarantine box is in Brooklyn, New York.
Okay.
And I just, that's where I live. And I just felt that I would be most efficient if I was at home near people I cared about, and mostly near internet signal so that I could be productive throughout this entire period.
Has it impacted workflows in terms of people going into the office and things like that? Or because it's obviously everyone's so used to working via the internet, has that really not interrupted the corporate structure per se?
It has impacted things, and we're also configured in such a way so that we can roll with it relatively easily. It impacted things quite significantly early on because it was a major cataclysm event in human consciousness, both the disease aspect and the economic crisis fear aspect. And so in our ecosystem and in our company, even though we're mostly wired to operate with our laptops from anywhere in the world really quite smoothly, we still had people that we work closely with getting sick and concerned about economic meltdown. And so for a while, people in our ecosystem and in our company were sort of in a state of shock. And some people weren't in a state of shock and were just fine and remained perfectly productive. But others, I think, were hit. I think there's research that indicates when you're in some sort of isolation, there are adjustment periods and then periods of depression. And so it's a pretty complicated thing to foist on the human population and the human condition. And we, as a company, are configured to I think, deal with it relatively smoothly, and we've been coping. And as a company and an ecosystem, I think it actually represents, aside from some of the horrors, it represents a tremendous inflection point in opportunity with respect to re-architecting how we all operate our lives and how we all architect systems on the planet.
Well, that was one of my questions later on in the interview, but I'm going to jump to that now, Joe. In your dream scenario, and I'm sure you've dreamed up a perfect scenario for how Ethereum's involvement in the future could play out. But in that dream scenario, how does Ethereum fit into the new world long after this COVID-19 induced depression is over?
Well, I don't think anybody can dream up a perfect scenario for how a set of overlapping complex systems and exponential technologies will unfold. So nobody can top-down design that stuff, and so it's just up to us to be agile and creative and opportunistic and principled. So how does this all unfold? Pre-COVID or post-COVID, I think many of us were hoping for similar trajectories, that the world moves away from subjective trust foundations, which are often embedded in centralized structures, to more automated and objective trust foundations. And that we move towards decentralization. So foundational elements of decentralization would include Ethereum and projects like it, but also decentralized or distributed storage like Filecoin, IPFS, decentralized bandwidth, decentralized heavy compute, decentralized identity, decentralized proof of location. So as the World Wide Web becomes increasingly decentralized, we hope to see all the world's, or many of the world's existing businesses re-architecting their systems in a better way so that they focus more on collaboration than strictly focusing on competition. Certainly competition is a healthy thing. I think this crisis is likely to accelerate the advent of that world, or the traction that we see that world have. It's feeling like monetary systems and the economy are experiencing existential challenges, and if we do see significant collapse over the next little while, and I think in some economic systems we will see that sort of collapse, we're probably going to see what some call the zombification or Japanification of the global economy, where there's just so much debt in the system that it's hard to be really productive because you're spending so much of your money just paying off debt. And so in that sort of zombie economy, just because we do have pretty decent social safety nets around the world, we can have a depression, and it'll be really quite unpleasant for a lot of people. But people will still be fed and sheltered and clothed, and there will be entertainment in a new style depression, but much less resistance, I think, to the building of new style systems. Systems with built on trustworthy collaboration networks that are tokenized and have governance built in. So, ultimately, I think that world that we've all been dreaming of is probably a lot closer, somewhere on the other side of this crisis.
Yeah, it certainly seems so. Joe, you've mentioned before that the Bitcoin white paper and its ideals resonated with you because of how debt-ridden and fundamentally broken our monetary systems are. That would have been in the early 2010s, around about there. Did you ever think that inflationary economic policies would ever go as far as they're going today?
only if humans are involved, I think. So based on human nature, you could run fractional reserve systems for a very, very long time, forever even. If humans were really disciplined, they're not fundamentally terrible systems. Only when they interact with human fallibility, greed, etc., do they start running off the rails. And I think the average life cycle for a money system lasts for about 70 years. So when you have politicians interacting with central bankers, influencing policy, and now there's even no pretense that the Fed is independent at this point. You essentially follow the wishes of the politicians, which are usually pretty self-centered. And so if they ultimately, through central banks, have the power to print more money, they're going to use that power in ways that are not necessarily focused on building or maintaining a stable, very long-term monetary system. So it's almost inevitable that something is going to start to run away, and their interest compounds, and you're going to have to pay more and more debt service as your life cycle through the monetary system unfolds, and eventually it's exponential. It has to run away. And so we've seen around the world bubble after bubble being blown. I think of the latest bubble as a government debt bubble, and it's astonishingly big. And so COVID didn't really cause a global financial collapse. It may have been the trigger that pricked the bubble, but something was going to come along and essentially unwind the tremendous imbalances that have built up. And ideally, we'll see better monetary systems come out of this. I don't know if the central bankers will be able to kick the can down the road one more time. I think it would be sort of good if we can sort of move this zombie economy forward for another 5 or 10 years. Gives us time to build better systems. But I think we're heading into a global monetary crisis probably fairly soon. But who knows? These things seem to be able to last for remarkably long.
You've spoken before about your distrust in the modern financial system, but at the same time, ConsenSys has been called upon to work with numerous governments in the development of blockchain-based CBDCs and the like. Is there a part of you that feels like you're selling out by assisting governments creating digital assets that are in some ways the antithesis of Satoshi's original idea? How do you reconcile the two ideals?
There's no part of me that feels like I or we are selling out. The Ethereum project right from the start was always interested in being inclusive. The mindset around this judgment about selling out is pretty tribal. And so this is a collaboration technology. It's all about building better systems for as many people and organizations as we can. And the Ethereum project and ConsenSys has always been interested in bringing as many people into awareness and use of the technology as possible. If we only kept it to a handful of maximalists that believe in the rigid philosophies that we believed in, I think that would be considered a failure. So it has to, in order for the decentralized protocol ecosystem to have succeeded, it needs to bring in virtually everybody, in a similar way to how the internet has enabled the vast majority of people on the planet to have access to information and communications and social networks, etc. And I think we need to be very comfortable that not only will people who are philosophically aligned with us be using these systems in similar ways to how we're using these systems, but people who are who I disagree with philosophically or otherwise should certainly be using these better systems and have a right to new, better technology.
You talk about tribalism, and it really is something that has established itself within the culture of decentralized finance and blockchain technology, especially with the Bitcoin maximalists. What is your message to so many maximalists who believe that there is no other decentralized digital asset besides Bitcoin?
I don't really think there are so many maximalists out there. I think there's a loud group of people that mostly. So for some of them, it's certainly religious, and I would call it not very rational, because if you're not looking at the facts, it's more of a religion than a well-founded argument. But different people get different things from different technologies or other activities, and if it's built into your portfolio or built into your identity, then it's easy to understand why people would be really fervent and loud about their beliefs. But really, the majority of people in the decentralized protocol ecosystem, I think, just embrace decentralized protocols, whether they're Bitcoin or Ethereum or IPFS or others. I would guess that the number of maximalists out there are probably significantly less than 1% of people that would consider themselves interested in these technologies.
Yeah, that's an interesting observation.
But every one of them are on Twitter.
there's also that. That observation of the fact that they are one of the loudest subcultures of those interested in the technology is probably hitting the nail on the head right there.
Yeah, you don't find a lot of people who are really passionate about getting on Twitter and proclaiming that they're sort of fair and balanced in their assessment of different technologies. There's just no point.
Yeah. Joe, what I want to do now is I want to come back to the very start of your involvement with decentralized finance, with Bitcoin, with Ethereum, and even roll back the clock a little bit further. Most of the public know that you're obviously the founder of ConsenSys, that you were instrumental in the establishing of Ethereum. Many in the crypto space even know you came from Robotics and AI, even that you ran sort of algorithmic trading systems. But very few people know what kind of AI robotics work it was that you were involved in. The mid-2000s was still very early for AI. You must have been somewhat ahead of the game. I mean, you were living in Jamaica before ConsenSys. What was it that you were doing, and why Jamaica?
So I did the robotics, machine vision, and AI work in the late 80s and early 90s. So it was way back further than you were thinking.
Wow, yeah.
I did a thesis in symbolic AI, where essentially built some software that helped learners learn Lisp. And that was sort of AI-ish back then. And I got really lucky because that forced me to hang out at the cognitive science laboratory at Princeton. And I ended up, just doing what developers do, staying up all night and hanging out with other technologists in the space. And there were lots of neural networks papers hanging around. And so for the next bunch of years, I ended up working on research staff at Princeton, doing essentially researchy things, different kinds of neural net technology, built autonomous road vehicles. We had silicon graphics machines, high-end workstations back then, and so we built simulations of. So there was a robotics laboratory with physical robots there, but we ended up building simulations of those physical robots and building control systems for those, and building neural network control systems for autonomous road vehicles inside of simulated driving environments. So very much what's relevant right now. We were doing in sort of doing AI and neural nets back then wasn't about sort of learning how the different parameters of different packages available on clouds affected things. So I was writing backpropagation code and conjugate gradient code and adaptive resonance theory code, etc. And it was really, so I would call it shallow learning as opposed to deep learning now.
So again, a lot of people know the story of Ethereum, how you and Vitalik, Anthony D'Orio, and others came together to release Vitalik's white paper to the world. Very few people know the story of ConsenSys. How did the idea for the company come about? And could you just take us through the early formative construction of the company?
My time on the Ethereum project was essentially focused on building out the protocol layer technology. I did some work that sort of resulted in a sketch of a business plan around what would be needed in building out an ecosystem. And back then, a bunch of us thought that the same group of people that were building out the protocol layer would be involved in probably forming for-profit company and bringing things like developer tooling, like software libraries, stuff like that. So sort of thinking about how in the 70s or 80s software platforms were built where you needed to provide math libraries to developers and string libraries and things like that. So I thought it would take sort of that form. I essentially wanted to live in the New York area, and the Ethereum Foundation rightly made the decision to set up shop in Switzerland for philosophical and political reasons, and many were concerned that the United States would be a dangerous place to operate or live, given that some people felt like we were issuing a currency. We thought of it as a crypto commodity or a crypto fuel, but certainly it had a lot of the characteristics of Bitcoin and could be considered a cryptocurrency, is a cryptocurrency. And in the past, the United States government hadn't treated people kindly who thought that they could issue their own token of value. And we've seen some interesting discussions over the past years about whether those value tokens should be all considered securities or not. I think the SEC has done some really great thinking about the fact that some of these value tokens can be just utility tokens, and that's where our legal work landed us, and that's where the world seems to have landed as well. So anyway, I was feeling like somebody should be in the United States building Ethereum stuff and building an Ethereum company, and started gathering some really smart technologists and entrepreneurs. We didn't know top down how to architect the decentralized future, and so it was about just exploring the solution space, running lots of experiments and figuring things out bottom up and linking things sideways. And we ended up building some of the most important projects in the Ethereum ecosystem. So projects like Infura and MetaMask and our Pegasus client, which is now called Hyperledger Besu, and a lot of pieces in the DeFi space as part of our Codifier Commerce and Decentralized Finance group, and other projects, OpenLaw and Gitcoin and Uport, many others. And so that's how it all started. We intended to be a venture studio, build out lots of different projects, and we ended up doing a bunch of consulting work because the technology was immature and the products were immature, and so we had to do a lot of hand-holding to help the world understand the technology and start using the technology. And it's all getting very concrete. I think our early conception was all about convergence, as we discussed earlier on this show, where we thought that we would bring the revolutionaries in the form of developers and startups and the evolutionaries in the form of legacy organizations all onto this new platform. And in many concrete ways, we're seeing that happen right now.
You mentioned when you started and as you were in those formative years, the technology was still immature, but now Ethereum is fast approaching 1 million developers. With so many ways that a software engineer can dev, from contributing to Ethereum's code base itself to writing Ethereum dApps, smart contracts, have you defined what an Ethereum developer actually is yet?
So I think we've defined many different kinds of Ethereum developers. So you can certainly be a protocol engineer. You can build out one of the open source clients, Ethereum 1 clients or Ethereum 2 clients. You can be a smart contract engineer. And there are just lots of domains, so whether it's gaming or decentralized finance or others, where you can apply your smart contract Ethereum skills. And more tangentially, but I think really relevant, this is a new kind of technology. It enables people to access the rails of value transfer to issue new assets. And so if you're a Python developer, if you're a JavaScript developer, if you're a Fabric or Corda or Cosmos developer, there should be tools that enable you to do something on Ethereum. You don't have to spend all of your developer waking hours building purely on Ethereum, but it's a tremendous utility for lots of different applications. We've been doing a bunch of work with Ernst & Young recently, work supported by Microsoft as well, on defining something called the baseline protocol.
Yeah.
Baseline is a technology that makes use of public mainnet Ethereum to enable organizations to essentially link their systems of record to one another using Ethereum as middleware. And so you can have a database or a blockchain or an ERP system on your side of the firewall, and you might have a bunch of counterparties, say in a procurement system, who have their own systems of record. And those systems of record tend to not stay in sync unless there's some sort of explicit reconciliation. And so we built technology using zero-knowledge proofs that enable, with zero information leakage, because you're not actually putting any business information on public mainnet. You're keeping all that private. You're using Ethereum as a system of reference, so that the agreements that you enter into with your different counterparties and the business processes, the steps that you're at, are all kept perfectly in sync. And so it's pretty much a revolution in how to, say, link ERP systems together. Actually, this morning, a press release came out pointing to a demo of a Microsoft Dynamics system interacting with an SAP system. So totally not blockchain related, except they're using this new public resource to keep their systems in sync. And so ConsenSys is facilitating the use of that technology. Organizations are, so there are like hundreds of organizations now that are paying intense attention to this new way of using blockchain, and we're starting to build an infrastructure to enable them to pay in ways that they're used to not worry about gas for transactions on mainnet, and so just trying to make blockchain usable.
And that's currently a topic of hot debate, especially for Ethereum, obviously around the scaling operation. Back in 2017, you envisioned up to 80 sharded Ethereum blockchains and the ability to scale the network in a quasi-linear way. From your perspective now, how far away do you believe Ethereum is from achieving effective scalability? And does that have to be entirely proof of stake?
So we have lots of scalability already on Ethereum. So the base layer can handle around 20 or so transactions per second, layer one. But we have pretty capable state channels technology that can handle infinite transactions per second for like payments outside of the network and settled on the network. There are technologies, roll-up technologies, zero-knowledge roll-ups, optimistic roll-ups, optimistic virtual machine. There's scale networks. Fortunate that I'm wearing the t-shirt. And these layer 2 technologies are already bringing hundreds and thousands of transactions per second that are anchored into Ethereum 1 for full security. Starkware's demonstrated, I think, 9,000 transactions per second in their layer 2 solution. Games are making use of the technology. Exchanges are making use of the technology. So scalability is happening. In parallel, Ethereum 2 is happening, and it's happening really quickly. Ethereum 2 is going to, in the not too distant future, call it 18 months, is going to add probably 1,000-fold scaling to the exciting scaling gains that are already being made. So Ethereum 2 rolls out very likely this year with phase 0, the beacon chain, the heartbeat of the system. And I think most important for developers and users even is to understand that even though a profoundly new and unconstrained technology is being built that will probably last for a few decades, just because I think all the needed advancements will be built upon the Ethereum 2 foundation. So that's state of the art, but it's going to be a smooth migration. So Ethereum 2 can be thought of as essentially a DeFi application on Ethereum 1. People are going to stake their Ether and get yield, sort of like a bond that people are paying into and getting good return for to launch the system. So there's a smooth transaction happening there. The second phase is the data sharding layer that you were referring to. So it'll be initially 64 shards of data. And those roll-up technologies that I was talking about require data availability to function effectively. And so we're going to see tokens eventually moving back to Ethereum 1 from Ethereum 2, and again, sort of demonstrating interoperation and evolution between the two systems. But all this new data on Ethereum 2 will be available to programs on Ethereum 1. The next, or the final major phase of Ethereum 2 is building execution environments. So building things like the Ethereum virtual machine. When that's available, and likely the first execution environment will be the Ethereum virtual machine, so that we'll be able to smoothly move over the state of Ethereum 1 to Ethereum 2. And Ethereum 1 will effectively be cradled in Ethereum 2, and programs running on Ethereum 1 can just keep operating if there's no reason for them to upgrade to new capabilities. But developers who want to take advantage of new capabilities, like any operating system, can upgrade their software.
Joe, we're going to take a short break to hear from our sponsors. We'll be back in about 45 seconds.
For fast local bank deposits and withdrawals, advanced charting tools, and API access for automated trading, sign up with Luno, Africa's most trusted, secure, and reliable crypto exchange. Go to www.luno.com or download the Luno app. Ranked in the global top 10 exchanges by Crypto Compare. T's and C's apply. Cryptocurrencies are volatile and unpredictable. Never risk more than you're willing to lose.
All right, we're back. Okay, so we now have a question from our audience here, and it comes from an experienced Ethereum developer who actually developed the non-profit Rhino token back in 2016, Jevin Coffingray. Jevin asks, Ethereum has empowered the growth of decentralized exchanges, but with their fairly clunky UI, slow interoperability, and the fact that centralized exchanges are now so deeply entrenched and established, what are your thoughts on the future of decentralized exchanges?
I think decentralized exchanges are going to be increasingly important. There are many different reasons for trading or operating on exchanges. Many people who use exchanges don't need high-frequency trading or extremely fast responses. Probably the majority of trades just don't need that. It would likely be better for the majority of trades to have fairer price discovery, to not have central counterparties that know the order book and are hunting stops and basically cheating their customers. So with respect to fairness, DEX win by far. The diffusion DEX that were by the Gnosis team is a spectacular demonstration of multi-constraint satisfaction, where you can have lots of different counterparties all enter into a trade with one another, and that market is cleared across lots of different counterparties. It's an amazing technology. So the technology is going to speed up, and while for most people it's not that critical that you have fast trading, as technologies like Uniswap and diffusion either run on upgrades of Ethereum technology or on faster and faster layer 2 technologies, I think even the fairer trading systems will get faster and faster. But there's nothing really fundamentally wrong with centralized systems. There are good use cases, and they'll persist for a very long time.
Right. So, Joe, thank you so much for your time. Just in closing, what we do is we ask our guests to ask a question to our next guest in the series. And our next guest is going to be, I'm sure you know, Andreas Antonopoulos. I'm sure you've had many a conversation with Andreas. But just for the sake of our next chat, what question would you like to ask Andreas?
It's a tough one. Andreas is awesome. He's a great mind. And yeah, we've had a couple of good conversations, but mostly enjoy listening to him. I would say, philosophically, which ecosystem maps onto his sensibilities best? Would it be Tron or Bitcoin or Ethereum or Fabric?
There's a lot to chew on, and I think we could get a really elaborate answer. So we'll be sure to send you his answer. Joe Lubin, everybody, thank you so much, Joe, for giving us this precious time amidst your crazy schedule. We wish you the very best as you continue to fight on through the COVID-19 pandemic. We send you all the good vibes and well wishes as you continue to bring decentralized computing to the world. So thank you so much.
Cool. Thanks, James.
Great. Thank you. Cheers. And there we are, episode 5 in the bag of the Global Crypto Podcast with Luno and another magnificent mind, Joe Lubin. Next week, we have an equally inspiring mind, Andreas Antonopoulos. He is the author of, get this, 6 different volumes from Mastering Bitcoin, Mastering Ethereum, and a whole host of other Bitcoin understanding tutorial volumes, all available on Amazon. Don't miss that conversation. It's episode 6 of the Global Crypto Podcast with Luno. Of course, every Monday night at 8 p.m. Central African time. That's 2 p.m. New York time and 10 p.m. Dubai time. We try and make sure that as many of our international audience can tune in live. Every week we have a YouTube premiere. So it's great to have everyone together on a Monday evening where they can join in the chat and be part of the conversation. And if you don't have a Luno account yet, what are you waiting for? Just head on over to luno.com. I've had a Luno account since the year 2014. They have always provided the market with some of the best user interface design, a great user experience, whether it be on the app or on desktop, great liquidity across their markets, great security as well, and of course, great service. Check them out, luno.com. Thanks to our sponsors. We'll catch you guys in the next edition, and until then, from myself, James Preston, it's goodbye.
Breaking news concerning the U.S. economy.
And it's gone.
What?
It's gone. It's all gone.
Not socialism.
All right, let's not panic.
And it's gone.
I'll make the money back by selling one of my livers. I can get by with one.
Government should be a partner. Partner.
I don't need anybody's money. It's nice. I'm really rich.
And it's gone.